Welcome back to Imperial Wealth's Crypto Chronicle Podcast, where we're recording a history book of all the events that have happened in the cryptocurrency industry. We're going to be reporting to you on a weekly basis, so let's head live over to our team right now to discuss all things that have happened in cryptocurrency this week.
Hello, everyone, and welcome back to another edition of the Crypto Chronicle Podcast. We had a 2-week break, didn't we, Taylor?
Mate, lots of pages returning.
Yes. And it's been a big 2 weeks as well. It's just Taylor and I, that's Mitchell, here today. Wilbur's not making it, but what a 2 weeks it's been.
Mate, it's been delightful, you know. We obviously had the massive convention in Australia, obviously, which was pretty good fun. But then, you know, myself getting COVID wasn't all part of the plan, but the way it goes.
Yep. And the price action's been incredible, hasn't it?
It's been juicy.
Yeah. And
it's been incredibly fun.
The fundamental news has been somewhat not too busy, I would say.
Yeah, I think you're right. Like it's been a little bit less spicy than what usually happens when we've got pushes like this, I guess. Yeah, for sure.
Yeah. Well, let's dive into some of that fundamental news, but we'll probably more importantly get to price action and mining because that's what's been red hot at the moment. But in saying that, you know, the main theme is we start off with every podcast is the ETF race, and it's heating up some more. We've had the infamous Pando join the race.
Much.
So they are the 13th in line. And we've seen BlackRock at the same time kind of introduce an updated in-kind model, which is submission of a Form S1. So I think Pando did a similar thing, and I think you're noticing a lot of institutions, they're all resubmitting the same S1 file. And I think what you can draw from this is it's essentially the SEC meeting with them all saying, this is what you need to fix, and then that's when we'll approve it. So they're all going back, they're making these updates. I highly doubt they're having these in-depth meetings with these institutions to tell them what to do on their updated file to then reject it at a later point. I mean,
mate, Gary would do anything.
He would burn it to the ground, wouldn't he? It's probably something he would do actually instead of not. But
he just dangle the carrot, but then as soon as you're about to take it, rip it straight away.
Yep, exactly. So it's good to see someone else join the intensifying race, but obviously that race should end about January 10, I think is the latest date. Is January 10?
Happy New Year.
Yes. So January 10 will be, I reckon we'll be returning to work on January 10 or around thereabouts. So
10? Are you kidding me? It's like the second. I know what you're talking about.
Well, I actually remember last summer, funnily enough, that's when all the price action was happening.
I remember it.
At the start of January, and we weren't quite back to work yet, and we were sitting at 15K, 16K, and then it was 18K and 20K by January 15 and 25K. Yeah,
I think we ended up on December, whatever it was, and came back, and Bitcoin was about 30% higher than when we left it, and I was like, this is incredible.
Yeah. Well, yeah, we kind of, it was funny, if you revisit the price action from the end of last year, the bottom, to even March, we went from 16K to 25K, I think back down to 19K after that USDC debacle and Silverbank, and then from there is when we rallied, obviously, for this whole move. But yeah, it's going to be an interesting month coming up, isn't it?
Mate, I'm looking forward to it. As much as it's like, I remember when we sort of had our Christmas chat breakdown sort of time period off, and I was like, God, this is going to be great. But at the same point, I just know that I'm going to be glued to work. Yeah. Because there's no way we're stopping down.
Exactly. Well, just one more further thing on those applications is that this morning BlackRock and Bitwise did submit revised applications to them, so that was including all of this. I think it was to do with including anti-money laundering measures and an audited statement, and I think essentially what the SEC claim they're worried about is, you know, volatile price fluctuations. So I think they've just been adding certain things into there to kind of please Gary and the SEC just to get it over the line. But obviously the main thing from this is everyone seemingly trying to front run it. We've spoken about this in prior podcasts, and you know, in the last month, Bitcoin's up 21%, I think, or probably more. You know, priced at around $42,000 now. So, you know, it was just a couple of weeks ago, we were just discussing whether the top was in for 2023.
Pump-tober, now it's pump-tember.
Oh, yeah. Well, I actually made a funny tweet at the end of October, and I said, I hereby call Pump-tober to be every month. And then we got Pump-vember, Pump-vember, and then Pump-sember straight after. So yes, every month is becoming a pump. But we have had 7 weekly green candles in a row, which is
I can't wait for
quite phenomenal.
Pumpuary.
Yeah, I'm kind of worried for the world when we get a red one. Everything might seem like it boils over.
That's also, I think that'll be a good thing anyway.
Yeah, it will be.
Shake a few out of the tree.
Yeah, exactly, which we'll touch on when we get to the technical analysis. But moving on to quickly just Australia, we spoke very briefly in the last podcast about those DeFi tax rules and then claiming capital gains. Yeah, capital gains taxes on, I think it was, swapping wrapped tokens for stable coins and that type of thing. And really what the ATO has done, if they've refrained from clarifying, this kind of perplexing and aggressive rulings, which is just...
Do you think they even understand it themselves? Because I don't.
No, because we've spoken on the past about Australia as a developed country being the worst innovative country in the world, or one of, and that doesn't shy away from the blockchain industry where we are the worst regulated as well, and we're falling behind. And, they want to come out with these daunting type of rules, and, they're not even legally binding, I think, non-ruling, which is what I'll get to my next point. We had an Australian law firm come out yesterday and disregard them, and comparing them to, in quotations, toilet paper is what these rules are. So, there's still widespread confusion that obviously still persists about which DeFi actions are tax-free and which aren't. But yeah, this Harrison Dell, the firm's founder, essentially recommended don't comply with them because, they're not, this doesn't make sense legally and they're not binding. So yeah, he just said he does lean towards these actions triggering taxable events based on private rulings, but yeah, he says there needs to be a lot more clarity. So don't get your knickers too much in a knot over these transactions.
Yeah, I think they're obviously, trying to scare the little guys because obviously they're still going after the big guys from 2016, 2017 area. Because obviously that's where they're up to in the transaction history. But you know what I mean? It's throwing a dart with a blind on is what I would say.
Oh yeah, definitely. And to finish off with our little Australian cryptocurrency industry, me and Will on the last podcast as well, we spoke briefly about self-managed super funds, which we'll actually dedicate an entire podcast to in the coming weeks, or maybe just in the new year, where we'll touch on how some of our bigger miner clients actually utilize their own self-managed superannuation funds to fund their miner farms and their investments. They do this to purchase them, to pay bills, etc., etc. And one thing we get with bigger clients is, that's kind of annoying, is the cash flow aspect, right, of it coming out of your own pocket in a sense, as opposed to having a self-managed super fund that just deals with it all, and it's not coming from your personal cash flow and not. But we'll go into more detail about that. But in saying that,
the way it works is basically just the same as a trust, right?
Yeah.
That's the main principle. Exactly. The same as a business,
And I mean, the thing is for those, if you are extremely bullish on crypto and you are wanting to get a serious amount of funds in it, which you may have in a self-managed super fund, but not available to you right now, and you don't want those to be going to stocks or whatever your financial advisor would be putting them into, you can put them into crypto. People don't know this. You can deal with self-managed super fund that puts it into Bitcoin, puts it into ETH, puts it into miners, blah, blah, blah. So for those that are keen on that, we'll speak on this more in the future, give you more details. But essentially, I'm just touching on this because in Australia, this isn't just with Mining Store. This has actually increased 400% in 4 years. So around 612,000 funds hold a total of 700 million in crypto, which is an increase of 130 million since 2019. So, that's an increase of close to 500 million in holdings across Australian superannuation funds for crypto in just 4 years. So, yeah, we'll touch on this in a couple of weeks or in the new year. But I think
it's an exciting new area, isn't it? It's crazy.
Yeah, and I think it's just an area particularly people don't know about.
Yeah,
so I think, a lot of people listening to this, or, if they do see it eventually, they'll go, fuck, I can't believe I'm not doing this.
The amount of people that I speak to and that are saying, can I do this with my self-managed? I'm like, 100% you can. You just obviously have to set it up in the same correct process you do when it comes to a trust or a business setup, and you're absolutely able to do it. Always talk to an accountant. All you need to do.
Exactly. Alrighty, we're moving on. We'll touch on Binance and CZ as it's kind of like the ETF race. We usually get something like this, although we may be a bit quiet on CZ from here on in.
I don't think so. I think he's literally just going to become the Elon Musk of crypto.
I hope so.
Where he's got his one foot in and 1 foot out.
Yeah,
I'd
support that.
Yeah, his daddy.
Every CZ tweet pumps whatever DeFi project he's in 40% every time.
I like it. Yeah.
So obviously a fair bit's happened in 2 weeks with Binance. Yes.
Does that mean we call the new one RT?
I'm lost.
Richard Teng.
Yes.
So RT now.
I reckon.
Yeah.
At least Will can't get confused with CZ and CZ. There's not many ways you can pronounce T, is there? Anyway. Essentially, we had CZ leave, as most people know. I can't remember what we spoke about the last time we did speak on this 2 weeks ago, but obviously they had the $4.3 billion fine. CZ got $50 million himself. $175 million bond, and there's talks about keeping him in the States by the US government as opposed to deporting him back to Dubai where he wants to be with his family because they think he's a threat and blah, 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 just ridiculous. But the newly appointed Binance CEO, Richard Teng, has come out and outlined his commitment to regulatory cooperation, obviously on his debut blog post. This is a given, obviously, given the fines and what they didn't comply with in the States. But essentially, his aim is to strengthen compliance and engage policymakers for a global regulatory framework. So it's good to see them making the right steps in the right direction. Hopefully, this can all get fixed in due time. And he also plans to promote, DeFi, decentralized applications, as CZ wants to do. Interesting time for Binance.
Is there information, is that what he's getting criticised for? Is there not enough information about how they plan on repaying the $4.3 billion? Is that kind of what the gist is?
I think they're very financially well. I remember looking at their bear market revenue in 2022, and we actually spoke about this on the last podcast. So I can't remember. It was something like 12 billion or 20 billion, and that was in 2022 when...
Yeah. Oh, they'd easily have it in rev. There's no issue in that in the slightest. But
they'll be able to pay it.
Is it a lump sum, though?
I have no idea how these...
Because surely you'd stretch that out over 10 years.
Yeah, probably.
Or 50.
We'll see. But one more thing for those traders out there, and in DeFi, ensure that if you're holding BUSD, which was the Binance stablecoin,
you get out.
BSC, go to a DEX, go to a swap, and whatever you're on, and swap it for USDT, DAI, or another stablecoin of your choice, just not BUSD, as that is seizing on December 15th, so in about 10 days. So this was obviously part of the gradual phase-out plan initiated by Paxos after, it was determined BUSD can't exist anymore.
So you got Feb, yeah?
Yeah, so you've got till Feb to redeem it. Withdrawals ending on December 31st, and I think any remaining balances will just be put to FDUSD, which is the new stablecoin on Binance, I think. So yes, for those holding any BUSD, go and check out your wallets. You probably got some sitting somewhere, and I know I did. So swap some over. Lastly, just on the fundamental, we'll quickly touch on a cool little mining initiative by Jack Dorsey, who was the original founder of Twitter. It's just something a bit different, but they've got a 6.2 million funding round, drawing support from investors like Accomplice and New Layer Capital. So essentially it propels the launch of Ocean, which is an initiative aimed at globalizing Bitcoin mining decentralization. I don't have all the 150 specific details on this project, but anything kind of positive towards Bitcoin's decentralization, I suppose, is a good thing, depending on where it comes from. But what would you say?
I think it's all cloak and daggers.
Yeah.
Bitcoin mining has never been more decentralized. As much as there's big farms and mining pools, the actual decentralization of it is the physical asset itself, not the pool.
I think maybe from his perspective and where some people come from, this isn't right now. It's, okay, we need to probably plan ahead for 5 years. If BlackRock owns 10% of Riot and 10% of Marathon and 10% of, and all of these, and their money starts going into ETS, and then they're going to start pumping their money into, how big is Riot's mining farms going to become with BlackRock behind them as an investor?
Oh, yeah.
So that's what I'm saying. So I'm thinking his aim here is...
But they can still use that pool.
No, but I'm just saying, I think people are looking down the line and they're kind of going, once this really heats up, it may not be as...
It definitely has a case, yeah.
Yeah, for sure. Alrighty, well, we'll move on to the technical analysis. So obviously, with the week off last week, we touched base last time. We were at 37,300, Taylor.
That feels so long ago.
We're up as much as $5,000 more since that time. I think when we left you, we're kind of just whipsawing in between 35K, 38K. You know, we touched 38K down to 36, back to 38, back to 36.5. And it wasn't until then, I think when we did that final touch of 36.5, it's kind of when we shredded all the way to 42.5K, which is the current high for 2023, which was put in this morning. So we didn't close around 42,500. We closed just under 42,000 and then saw a bit of a sell-off since there. So I'll quickly take a look at the price because I did see we touched about 41,500 before, but no, we're back to 41,800. So could be a bit of consolidation here. I will briefly talk about alts and Bitcoin dominance after. But for Bitcoin, for now, all high time frame charts that I've shown in prior chronicles that I put in the written chronicles are all coming to fruition. Really good. So these were the market structure ones, the high time frame descending parallel channels on the log scale, inverse weekly head and shoulders. These are all looking really healthy. And, you know, I was sending these out to you guys at 30K Bitcoin and we're at 42K Bitcoin now. So they all look really good. And I made mention on the podcast and the chronicle, it wasn't just these coming to fruition, it was actually invalidating all the bearish high time frame scenarios. That was the best feeling because, you know, whilst I had high time frame ideas that were bullish, I still had high time frame ideas that were bearish, and it was the bearish ones being invalidated technically that made me feel a lot better. So that's always good. We are at resistance right now though, this 42,000 mark. If we can get a daily close above 42,500, I'd say the quest towards 45 to 48,000 is not too hard because there's not too much structural resistance between here and the major golden pocket and our last major high from, you know, March of last year before we crashed. So I'll show this in the chronicle. Might be worth your time looking at it. But for ETH is above 2,200 at last. So ETH has broken its multi-year resistance that existed pretty much from the last bear market that had two goes at during bear market rallies. You know, we saw ETH 2.0 come out. It rallied to 2,100 odd. Went all the way back down to 1,500 odd. We went back up recently. We rejected. We came back down again to 1,900. We've now gotten past it. So it's very similar to Bitcoin in the fact that there is a lot of clear air above ETH right now, not much structural resistance now. This doesn't just mean that ETH is going to fly $1,000 in a minute if it fully breaks out. It just means that it's got a better chance to.
Strap at the house on, is what you're saying.
Yep. So, but I do want to say that doesn't mean to get carried away with ETH. You know, you do know in a month's time we have an ETF approval on Bitcoin. I speak about this a lot with Trading Academy members, but I expect Bitcoin dominance to hit at least 57 to 60% on an ETF approval. I don't even think there needs to be an ETF approval. I just think it needs to hit there before we really see, because in every single cycle, no matter what, it's Bitcoin first, then it's consolidation, then it's alts. I don't see Bitcoin breaking to 42,000 and then spending a couple of months sideways and letting alts play catch up. I see it hitting, if we do something like this, hitting ATH and beyond, and then that happens. So we're sitting, you know, I sent a message to Trading Academy members yesterday. I said, you know, when Bitcoin is in only up mode, it's easy to get lost in the euphoria because it rarely only ever just goes up. You know, you'll get crash dumps, consolidations here and there. And that's why it's not too important to focus on alts right now whilst the percentage of Bitcoin dominance is looking to go up and it's still so high. Is like last night was the perfect example where probably a couple of hours after I sent that message, we got a flash crash on alts. Bitcoin dominance went up 2% yesterday and alts were back to where they were when Bitcoin was 35K. 30K, you know, it's this whipsaw price action. You know, you can go back and look at ARB 3 months ago. It was probably at $1.20 when Bitcoin was 25K. You know, Bitcoin's doubled in price almost now, and it's at $1.10. So
exactly.
Sometimes getting caught up in alts in this stage of the cycle isn't the great. You know, we were investing in alts in the Trading Academy last November, September at cycle lows, you know, and things like Sol, Link, you just those type of majors that have doubled, tripled, quadrupled in price, but they'll consolidate for a bit now. They've got their whipsaw price action. It's probably not the easiest place to invest in now.
You're not going to get alt flips anytime soon, really.
So just something to be aware of. Don't get too caught up in alts. You know, it's Bitcoin's time right now. You know, dips haven't come on Bitcoin yet, but they will. And when they do, don't get shaken out. Don't paper hand. If you see Bitcoin go to 50K and then back to 40K and test 40K support, that is a very good thing. And it's a lot more of an opportunity for you to buy than, you know, it is being sidelined on
exactly
odds.
Right.
something to think about if you are sideline, particularly. But, you know, the trading company at the moment is going awesome. I think we have about roughly 160 unit profit in this bear market currently rolling forward, which is awesome before we get to an alt season or
Mate, it's a mini bull run for that.
Yeah. So that's really awesome to see. Day trading, we've got competitions going on right now. Closest to the pin for New Year's. Winners getting 200 USDT from
Can
myself.
I resubmit?
What's your call?
My call was like 39.
You've already lost almost.
And there we go.
Unless, hey, I said to all those, because we did start this competition last week, so, you know, there were a lot of 39Ks, 40Ks. I think the highest answer we got was 41.5K, which has already been breached. But just because we're there now doesn't mean we can go to 50K and buy New Year's, be it 40K again or 39K. Exactly. So something to think of. But the day trading's going awesome, having heaps of live streams, AMAs at the moment, of course. If any of the trading services interest you, hit up Taylor or myself in the Discord. Now mining. Block rewards going crazy.
Mate, today they're going crazy, which is funny as because literally I wrote this mining update and then I think about 5 minutes before we came in, you said, do you want to rewrite it? And I looked at it, I was like, oh, not really, I'll just talk about it. Like it's still going to take me a bit. But anyway, so yeah, obviously at the moment, you know, the biggest thing that's probably changed, I reckon, in the last 6 to 8 months has been that the earth shake then. The block reward is the biggest change. And the main reason behind that is obviously transactions are, you know, doubling, tripling, quadrupling, whatever you want to call it. You know, back circa 8 to 12 months ago, your average block reward from transactional fees was sort of sitting at, you know, 6.25 for block reward, but transactional fees were like 0.2 to 0.4.
Yeah.
I remember when ordinals came out and it was 0.5 and I was losing my lid. At the moment, like, you know, they've been averaging around 1 Bitcoin extra now.
Yeah, that's
on
crazy.
average. And like that's a trend that I think we're going to see continue. The more adoption, everything, it only points to further increasing the fees and obviously thus rewarding miners. Like that, in essence, is the goal for Bitcoin over the next 100 years to transition from block rewards to transaction rewards.
Yeah.
So, yeah, literally walking in here, they've hit 2 Bitcoin now. It's nuts. So they're going crazy. And I think it's just obviously, it always happens when you've got obviously market movement coming off a weekend where there has been market movement. Obviously, is going to expedite that. So it's been really positive. Yeah. That being said, the hash rate has, you know, gone a bit dandy, but that's just the way it's going to be. You know what I mean? I think we've spoken about it a few times before and about how, you know, the big funds are looking as though there's data that suggests they're buying miners because it's going to be easier to get Bitcoin to sell it to their clients at a bigger markup than just buying it at spot price.
Yes, I did float that conspiracy theory, didn't I? I can't remember if me and Will spoke about it last time, but it was an interesting notion, and I obviously mentioned it before with their investments in Riot and a number of other large institutions that mine. People are getting that kind of feel that they're accessing all of this Bitcoin via these investments they have, as opposed to spot buying it on the market and driving price up, because for them, every time they buy, they're driving the price up. It makes it more expensive for them to buy more. So it would make sense. Even, like, we don't know if they're doing OTC deals with big whales. Like, hey,
I'll put it into perspective of a way that really honed in for me that made a bit of sense. And that is, so usually like when new machines come out, you can buy them from Bitmain still for like 3 to 6 months. Whereas right now, S21s are gone. They're gone. You can buy only retail secondhand, like not secondhand, but second retail sellers. But I know for a fact that 50,000 S21s were sold out in a week. Yeah. To one person.
And like, it just logically makes sense, doesn't it? Like they were interested in an ETF 6 months ago, whatever it was. And exactly 2 months after that, they've been poured all of this money into different different public companies that mine Bitcoin.
Yeah. So. But even then, when you think about it from a logical standpoint, right? Okay, you're buying a Bitcoin at, you know, 40K USD or whatever it is to sell to your clients at 41. Yeah. You know, awesome. Good little bit of markup. Yeah. Whereas you can mine it for 20.
Yeah. Yeah.
And on a longer scale. So that's the issue that you're going to see. And as much as like this might sound like a huge negative, like, oh no, the hash rate's going to go up and machine prices and vice versa, that's only if you're late. Yeah. And that's only if you don't understand what's happening. So like the people that are really going to suffer are the small retail that aren't willing to hold.
Yeah. Or like you said, just buying late, because it's when they're pumping, it's when their clients are pumping, and it's just at the end of that you want to get out. It's not you want to join, just as they're raging and joining. It's, it was funny. I saw, already this morning, I saw the Bloomberg analyst predicts 500,000 Bitcoin by 2025. And all I thought was, I can't wait for that quote to come back at the start of 2025. And let's just say Bitcoin's 80,000. And everyone thinks it's going to 500,000 because Bloomberg said so. And that is when I'll be selling on those type of people. Because if you go back and you look at Bloomberg, they gave those exact price predictions in 2021 and 2019 and blah, 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 blah. So
you got to love those moonshots, though. That's what makes the industry great, as much as they're absolute quacks.
Oh, yeah. Well, it's good. We get both sides. We get Bloomberg saying 500K and Capo saying 10K. So, we've got a good relative scale to go on. But I think we'll wrap that up. Been a solid 25 flat. Good to get back on the podcast. Obviously got, I think, next week and the week after, so we'll probably 2 more. Maybe we'll do a little Christmas special.
Mate, Christmas special is going to be on.
Yeah, I think Satoshi Nakamoto has said that he is going to come on the podcast.
We have a special guest.
And if not, I'll force him to. So
yeah, Lum's coming on.
Stay tuned for that. But thank you. We'll see you next week.
Thanks, guys. Bye.